Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 130, recorded here on August 25th, 2024. This podcast is for entertainment only and is not investing advice, so please do your own homework. All right, well, we'll start with the market update and outlook, then get into the top Bitcoin news. The U.S. stock market finished sharply higher Friday, sparked by the Federal Reserve Chair Jerome Powell's strongest signal yet that interest rate cuts are coming. The time has come for cuts, Powell said at the Jackson Hole Economic Symposium, increasingly confident that inflation will return to the central bank's 2% target. Big tech stocks led by Tesla and Nvidia rallied with particular strength as investors hoped a lower rate environment would benefit the group. Treasury yields finished broadly lower, with the two-year yield dropping 9.6 basis points to finish at 3.912%, the third lowest closing level this year. For the week, the Dow Jones average jumped nearly 1.3%, the Nasdaq Composite added 1.4%, and the S&P gained 1.5% after all three benchmark indexes gained more than 1% on Friday. And the Dow Jones and S&P scored their second highest closes ever. Wow, everything's great. Next up, looking ahead, the spotlight next week will be on NVIDIA's earnings report, which has the potential to move markets. The chip-making giant's highly anticipated report could have broad implications for the AI growth story. Wedbush Securities' Dan Ives believes that NVIDIA report makes the week the most important of the year for the stock market. The earnings calendar for the week ahead also includes key reports from Salesforce, CrowdStrike, Best Buy, and Dollar General. Also on the deck is the Bureau of Economic Analysis's PCE report, which will be the last one ahead of the Federal Reserve's next decision on interest rates on September 18th. So we will look forward to how the Federal Reserve will manipulate the most important price in the economy in September. Will it be a quarter point cut? Will it be a half a point cut? Inquiring minds want to know. Jumping into Bitcoin news, this is from No BS Bitcoin. This was posted on August 23rd. The Friday update. So here's what's happening. Spiral grants. Nick Johnson is the latest Spiral grantee. He's working on improving privacy with BIP324, a Rust library that enables light client encrypted messages. Spiral also renewed the grant for Alyssa Hertig, who is working on LNDK, which aims to implement Bolt 12 functionality externally to LND, which is the Lightning Network, of course. FinCEN's regular wallet KYC proposal is officially dead. In 2020, the Financial Crimes Enforcement Network proposed KYC requirements for regular Bitcoin wallets, prompting immense backlash from the industry. The proposal faced a major setback when the comment period was extended by 15 days, ensuring President Joe Biden would be in office instead of Trump Mnuchin. Although the rule occasionally resurfaced, it was never seriously reconsidered. Finally, on August 19, 2024, the proposal was officially withdrawn. A small victory in a broader war against people who want privacy. Tim Draper leads $2.5 million funding round for Arc Labs. Arc Labs announced the completion of a $2.5 million pre-seed funding round led by Tim Draper and his firm Draper Associates. We'll get into this one a little bit more detail, but there was a Germany Bitcoin ATM raid. German authorities confiscated $28 million and 13 Bitcoin ATMs in a nationwide operation targeting unlicensed activities. Boy, they really don't like Bitcoin over there, do they? Bitfarms to acquire Stronghold Digital Mining. Bitfarms will expand its U.S. Bitcoin mining capacity via a $125 million stock-for-stock merger with Stronghold Digital, also assuming $50 million in debt. CEO Ben Gagnon stated the deal follows 3 years of discussions. Riot Platforms nears a 20% stake in Bitfarms. The company invested $10 million more since August 15th to acquire 4.5 million additional Bitfarms shares, totaling 19.9% holdings as of August 20th, reports the Miner Mag. Bitfarms adopted a poison pill strategy, granting shareholders one right per share, exercisable if any entity acquires 20% plus of Bitfarms shares without a, quote, permitted bid. Lightning startup TMRW raised $1.3 million to develop a social cross-border payment app leveraging the Lightning Network for speed and low fees for remittances. Love to see that. Griffin Digital Mining acquired ultra-low-cost Bitcoin mining operations at 1 penny per kilowatt hour. The company has entered into an agreement to acquire up to 2.9 megawatts of Bitcoin mining operations powered by ultra-low-cost electricity in the penny per kilowatt hour range in Louisiana at a cost of $1.5 million. Next up from Bitcoin.com, this is the week in review. I will try to skip over the shitcoin news and just get to the good stuff. Let's see. First here, as Kamala Harris eyes the presidency, reports highlight the Harris-Walz campaign's backing of President Joe Biden's budget proposal. This plan seeks to raise capital gains taxes to 44.6%, and introduces a 25% minimum tax on unrealized gains for Americans with over 100 million in wealth. Oh, well, I guess we don't have to worry about it then, because it's just for rich people. Oh, wait a minute. They can always lower it. And then with hyperinflation, we'll all be worth $100 million. So it'll just eventually apply to everybody. Harris is also targeting an increase to the corporate tax rate, planning to bump it up from 21% to 28%. Yes, let's just raise more taxes so we can spend more money and waste that money on garbage. So really don't like that. Next up here, Rich Dad Poor Dad author Robert Kiyosaki has explained why he is preparing for a crash landing. He's been talking about that for a while. He criticized U.S. leadership, including Vice President Kamala Harris, Treasury Secretary Janet Yellen, and Fed Chairman Jerome Powell, calling them the Three Stooges. Kiyosaki advised his followers to invest in gold, silver, and Bitcoin, emphasizing self-reliance over relying on the Federal Reserve. And, well, can't say I don't disagree with him. I mean, I totally agree with him, actually. Peter Schiff urges the Fed to raise rates and let the markets crash. Economist and gold advocate Peter Schiff has recommended that the Federal Reserve raise interest rates instead of cutting them, even if it leads to a market crash. He acknowledged that this approach would likely cause stocks and real estate to crash, resulting in a hard landing and trigger a recession, emphasizing the potential severity of these market consequences. Well, yeah, I mean, that's how markets operate. Unfortunately, since 2008, the Fed has not really allowed the free market to do its thing. And they probably won't until something really bad happens. So that's for sure not going to happen. But that's probably what's needed to reset and burst the bubbles and get everything back to normal. But I think they'll just keep the show going. Let's see. On Thursday, U.S. spot Bitcoin exchange-traded funds continued their winning streak for the 6th day in a row, amassing $64.91 million. Meanwhile, the 9 spot Ether ETFs experienced a modest outflow, losing $874,610. And that about wraps that up. Let's look at the Cointelegraph.com Hodler's Digest for August 18th through 24th. Again, I will try to skip over the shitcoining and just focus on the good stuff. Let's see. Partner of ex-FTX exec hit with a campaign finance charges. United States authorities have charged Michelle Bond, the partner of former FTX Digital Markets co-CEO Ryan Salam, with violations of campaign finance law. In an indictment unsealed on August 22nd in the U.S. District Court for the Southern District of New York, U.S. Attorney Damian Williams alleged Bond and an unnamed co-conspirator illegally funded her run for the U.S. House of Representatives in 2022. Prosecutors charged Bond with conspiracy to cause unlawful campaign contributions, causing and accepting excessive campaign contributions, causing and receiving an unlawful corporate contribution, and causing and receiving a conduit contribution. The unnamed co-conspirator, Bond's romantic partner and a high-level executive at now-defunct cryptocurrency exchange, likely referring to Salam, allegedly arranged a $400,000 payment from the firm to Bond. Prosecutors alleged she made false statements to the Federal Election Commission and a congressional committee to conceal her and her co-conspirators' conduct. What about all the campaign financing that occurred from FTX to all the people in Congress? Oh, yeah, that's right. They're not going to pursue that because, well, Sam's already in jail, and we'll just bury that. And then this will just be a little distraction. McDonald's Instagram hackers make 700,000 shilling Grimace meme coin. Okay, this is funny. Scammers who hacked the official McDonald's Instagram page on August 21st made off with over $700,000 in Solana after using the fast food giant's social media page to promote and rug pull a meme coin called Grimace. According to screenshots shared on X, the McDonald's Instagram page made a series of posts promoting a sham token based on the fast food chain's purple mascot, Grimace. Several posts described the sham meme coin as a McDonald's experiment on Solana, which was blasted to its 5.1 million followers around the world. According to data from blockchain analytics service Bubble Maps, the hacker first used Solana meme coin deployer Pump.fun to snap up 75% of the total circulating supply of the Grimace token before splitting it between roughly 100 different wallets. Following the post from the official McDonald's account, the value of the Grimace meme coin rallied from a market cap of a few $1,000s to as high as $25 million within 30 minutes per DEX screener data. The token's price then plummeted as the hacker dumped their holdings, and within 40 minutes, the value of the meme coin slumped to as low as $650,000. Just stay away from the shit coins. It's just sad that people keep getting sucked into these things. CZ and Binance face a new lawsuit for alleged laundering of stolen crypto. Binance and its former CEO Changpeng CZ Zhao are facing a new class action lawsuit from three crypto investors who say they couldn't recover their stolen assets because the exchange failed to prevent money laundering. In an August 16 class action suit filed in the United States District Court of the Western District of Washington, Seattle, the plaintiffs allege their crypto was stolen, and those funds were sent to Binance by the thieves to remove the connection between the ledger and their digital assets, making them untraceable. The plaintiffs argued that a key attribute of crypto transactions is a permanent record of those transactions on the blockchain, which makes them permanently and accurately traceable. Therefore, without a place to launder crypto such as Binance.com, if a bad actor steals someone else's crypto, there's a risk the authorities would eventually track them down by retracing their steps on the blockchain, the class action suit alleges. The plaintiffs say Binance was an essential part of the money laundering process, which violates the Racketeer Influenced and Corrupt Organizations Act. RFK Jr. says he is suspending but not terminating his presidential campaign. Speaking in a live-streamed event from Phoenix on August 23rd, Kennedy said he was simply suspending but not ending his campaign for the U.S. presidency in 2024. RFK Jr. said his name would remain on the ballot in most states, but he would remove himself in 10 background states to avoid being a spoiler for either Democrat Kamala Harris or Republican Donald Trump. In an honest system, I believe I would have won the election, said Kennedy. In my heart, I no longer believe that I have a realistic path to electoral victory in the face of this relentless, systematic censorship and media control, so I cannot in good conscience ask my staff and volunteers to keep working. Independent United States presidential candidate Robert F. Kennedy Jr., also known as RFK Jr., announced he was not dropping out of the 2024 race, heavily criticizing the Democratic Party and media outlets. Court denies Kraken's motion to dismiss SEC lawsuit. The United States federal court denied crypto exchange Kraken's motion to dismiss a U.S. Securities and Exchange Commission lawsuit alleging that Kraken is operating an unregistered securities exchange, according to an August 23rd court filing. In November, the SEC charged Kraken with operating a crypto trading platform as an unregistered securities exchange, broker, dealer, and clearing agency. The SEC has plausibly alleged that at least some of the cryptocurrency transactions that Kraken facilitates on its network constitute investment contracts and therefore securities and are accordingly subject to securities laws, according to the opinion of the U.S. District Court in Northern California. The ruling is a setback in the industry's ongoing tussle with the SEC to define which cryptocurrencies, if any, qualify as securities under the U.S. law and therefore fall under the SEC's jurisdiction. Once again, a court confirmed that the framework used to identify securities for nearly 80 years still applies, regardless of the labels used, an SEC spokesperson said in a statement. Investors in crypto assets offered or sold as securities should get the same protections as investors in other securities, even when they are traded using intermediaries. Crypto trading platforms should register with the SEC and ensure they have safeguards against fraud and manipulation, the commingling of customer assets, and conflicts of interest. Until they do so, investors will continue to get hurt, the spokesperson said. And this is interesting. Prediction of the week. Bitcoin must clear resistance at 62K to avoid another Black Monday. Bitcoin is at a critical tipping point. It needs to hit 62,000 and stay there to avoid a retest of 49,000, according to an analyst note from one crypto exchange. However, several crypto traders believe Bitcoin is unlikely to drop below 50,000 anytime soon. The price action suggests a corrective pattern rather than a strong bullish reversal, Kraken stated in an August 21st technical market update viewed by Cointelegraph. At the time of publication, Bitcoin is trading at 60,691, having not reached 62,000 since August 9th, according to CoinMarketCap data. The market update further explained that Bitcoin is trading near its 200-day exponential moving average of 59,500, which gives more weight to the most recent price data. To avoid retesting 49,000, Bitcoin needs to clear resistance at 62,000, said Kraken. Bitcoin last fell below 50,000 to 49,842 on August 5th, which is referred to as Crypto Black Monday, marking its first visit to that level since February. A move to 62,000 would be an unexpected move for a large number of futures traders, wiping out 1.04 billion in short positions, according to CoinGlass data. And let's see. A little bit more here. FUD of the week. SEC opposes Richard Hart's bid to dismiss $1 billion securities lawsuit. The United States Securities and Exchange Commission has pushed back on HEX, that's a shitcoin, folks, founder Richard Hart's bid to toss its $1 billion securities suit, arguing it has the full authority to bring the case to Hart. In his motion asking the court to dismiss all the claims against him, Hart disregards the well-pleaded allegations of the complaint and the applicable law, the SEC said in its opposing argument, filed in a New York federal court on August 22nd, but dated July 8th. In a dismissal motion filed on August 22nd that was shared with the SEC on April 8th, Hart, real name Richard Schuler, claimed the regulator has no sway over him as he lives abroad and is not alleged to have set foot in the United States during the relevant period. Oh, it doesn't matter where you live. If you break the U.S. laws, they are coming for you. It added that the SEC didn't allege Hart engaged in any conduct directed at the U.S. and didn't claim any U.S.-based entities, employees, contracts, payment accounts, marketing efforts, or travel associated with Mr. Hart. The SEC hit back, claiming he directed many of his promotional efforts specifically toward investors in the United States, as Hart twice appeared virtually before a Las Vegas conference in March and September 2022 to promote HEX, Pulse Chain, and PulseX, which it claims are unregistered securities. Oh, there they are again. Uh, let's see. Nearly 80% of hacked cryptocurrencies never recover in price. The majority of hacked cryptocurrencies are unable to recover from the exploit in terms of pricing, according to the latest on-chain security report. Over 77.8% of hacked cryptocurrencies suffered sustained negative price impact 6 months after the hack. Moreover, 51.1% of hacked tokens saw over 50% price decline 6 months after the protocol was hacked, according to a Munify report shared with Cointelegraph. Just Bitcoin, no shitcoins. And that about wraps that up. Let's see. Next up is from CoinDesk. Fed Chair Jerome Powell. Time has come for policy to adjust. So let's go for a deeper dive into that news from this week. After a long wait, central bank rates in the U.S. now appear certain to be headed lower in September, after Jerome Powell said, "The time has come for an ease in monetary policy. My confidence has grown that inflation is on a sustainable path back to 2%, said Powell in his keynote address at the Kansas City Fed Jackson Hole Symposium. Uh, in other words, it's okay for the government to steal 2% of your money every year. The labor market has cooled, and by the way, it's much more than that. The labor market has cooled considerably from its formerly overheated state," he continued. "We do not seek or welcome further cooling in labor market conditions." Uh-oh. "The time has come for policy to adjust," added Powell. "The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks." Though markets fully expected Powell to indicate that a rate cut was coming at the Fed's September meeting, the tone of his remarks likely leaned a bit more dovish than anticipated. In the minutes following the release of his speech, Bitcoin added more than 1% to 61,900. A check of traditional markets finds big gains as well. The Nasdaq is higher by 1.7%, while the S&P 500 is up 1.2%, and gold has climbed 1%. The 10-year Treasury yield has dipped 5 basis points to 3.8%, and the U.S. dollar index has fallen 0.6%. After years of near-zero Fed policy rates, the U.S. Central Bank in early 2022 embarked on a long series of rate hikes, eventually taking the Fed funds rate up to the 5.25 to 5.5% range in 2023. Since, it's been a waiting game, with the Fed wanting to see crystal clear signs that inflation was meaningfully slowing to its 2% target before moving to begin trimming rates. That day surely has now arrived. The question going forward will be if the Fed cuts the federal funds rate by 25 or 50 basis points at its mid-September meeting. Markets continue to lean towards 25 basis points, but the chances of a 50 basis point move have grown to 32.5%, currently from 24% one day ago, according to CME FedWatch. There remain some key economic reports between now and that of September decision, August employment and inflation numbers among them, which should be key to the Fed's ultimate decision. Lower real interest rates tend to weigh on the value of the dollar and can support assets that compete with the dollar, like gold and Bitcoin, said Zach Pandel, head of research at Grayscale Investments. The combination of Fed rate cuts, improving U.S. political sentiment around crypto, and net inflows into U.S. crypto ETFs should support Bitcoin's price to return to all-time highs in the coming months. And I did check the trading market too, and it looks like they're predicting a 25 basis points as well. Polymarket. It's a pretty interesting site. You should check it out. They've got like everything on there. Seems like the presidential election winner is the most popular one, but there's all kinds of stuff out there. Okay, next up is Crypto Potato. This was posted on August 25th. This is the ETF weekly recap. Bitcoin ETFs have been on an impressive streak lately, and the last trading week saw more than 500 million allocated to the largest US-based products. However, Ethereum ETFs are in the opposite corner with minor trading volumes and withdrawals. The spot Bitcoin ETFs had a rough start of the month as they lost more than $550 million in just 3 days on August 2nd, 5th, and 6th. This coincided with the major crash for Bitcoin as the asset tumbled from over 65,000 to under 50,000 in just a few days. However, both the inflows and the cryptocurrency's price started to recover in the following weeks. In fact, there have been only 2 days since then when investors have pulled out funds from the US-based spot ETFs on August 9th and 14th. Past week was quite impressive for the financial vehicles as they attracted in total $62.1 million on Monday, $88 million on Tuesday, $39.5 million on Wednesday, $64.8 million on Thursday, and a whopping $252 million on Friday. Overall, $506.4 million entered the ETFs in the span of 5 trading days. As usual, BlackRock's IBIT was at the forefront on most days, gaining $92.7 million on Monday and $86.8 million on Friday. In contrast, Grayscale's GBTC continues its outflow streak with $12.8 million leaving on Tuesday, $9.8 million on Wednesday, $28.4 million on Thursday, and $35.6 million on Friday. When are they going to reduce their management fee? According to Farside, BlackRock's Bitcoin ETF now holds more than $20.7 billion, while Grayscale's ETF trails by nearly $1 billion. It's been 3 weeks since the spot Ethereum ETFs launched in the States, but the experience has been entirely different compared to their Bitcoin counterparts. I wonder why. Oh yeah, it's a shitcoin. In fact, the ETH-based products have been on a 7-day withdrawal streak, even though the numbers are quite low. However, that only demonstrates that the demand and interest in those products are lacking. Shocking. All right, let's see. We'll go into a little bit more detail on the German crackdown on crypto ATMs. So, wow, and the previous article cited a much different number. This one says German authorities seized nearly 250,000 euros or $279,000 in cash and 13 crypto ATMs during a nationwide crackdown. It's not 20 to 27 million. Anyway, the operation led by the Federal Financial Supervisory Authority is part of a broader effort to strengthen regulatory oversight in the country's rapidly expanding cryptocurrency sector. On August 20th, German administrators executed a nationwide sting operation targeting 35 locations where crypto ATMs were allegedly operated without proper licensing. This was done in collaboration with the nation's central bank and law enforcement. In an official statement, BF130 emphasized the dangers associated with unlicensed crypto cash machines, noting that their frequent use in illicit activities such as scams, fraud, and money laundering. Heard that one before. The agency reiterated its dedication to safeguarding Germany's financial system and enhancing consumer protection. Thank you, government, for protecting us. Operators found to be flouting licensing laws face serious penalties, including the possibility of up to 5 years in prison, as per BA-FIN. According to Coin ATM Radar, there are 177 Bitcoin ATMs located across cities such as Dusseldorf, Berlin, and Stuttgart. These machines operate under the framework of the country's Banking Act, which requires operators to secure authorization from the Federal Financial Supervisory Authority, or the BA-FIN, to ensure compliance with regulatory standards. Authorities have warned that crypto ATMs could become hubs for criminal activities if operators do not implement robust know your customer measures, particularly for transactions exceeding 10,000 euros. The unclear legal framework surrounding crypto cash machines in the country has raised concerns about their potential misuse for illicit activities, including money laundering and terrorism financing. However, the recent Action represents a significant step towards market regulation and safeguarding citizens from exploitation. This move aligns with a broader international trend, and in 2023, the UK's Financial Conduct Authority shut down 26 crypto ATMs operating without proper licenses, citing similar concerns about their involvement in laundering illicit funds. Boy, they talk about that, but where are the criminals really putting most of their money? In banks. Oh well. In addition, crypto exchange Binance managed to recover over $73 million by July 31st this year from crypto hacks and scams. Meanwhile, the German government has recently drawn attention to its handling of seized cryptocurrencies, particularly following the sale of the last of its Bitcoin in July 2024. The sale involved 3,846 Bitcoin, each valued at approximately 62,604, most of which has been confiscated in previous operations. Yes, they stole the Bitcoin and then they had paper hands and they sold it and now they don't have any. And how sad. Next up is from Cointelegraph. This was posted 9 hours ago. Some pretty serious news here. Telegram founder Pavel Durov arrested. And here's what we know. Telegram founder and CEO Pavel Durov was detained by French authorities in relation to a search warrant targeting alleged violations of the encrypted messaging platform. According to Le Monde and other French media outlets, Durov was arrested at Le Bourget airport north of Paris after landing in his private jet, which had traveled from Azerbaijan. Le Monde cited sources close to the case that confirmed Durov's arrest. At the same time, a Bloomberg report noted that Russian Foreign Ministry spokeswoman Maria Zakharova also corroborated the information in a Telegram post. According to reports, France's L'Office Mineur, or the OFMIN, the agency that oversees crimes against minors, issued a search warrant as part of a preliminary investigation into Telegram. The AFP reported that the alleged offenses range from fraud, drug trafficking, cyberbullying, and organized crime. Numerous reports note that the investigation is rooted in Telegram's alleged lack of content moderation. OFMIN is coordinating the investigation into Durov and Telegram. The messaging platform CEO is reportedly expected to appear in court on August 25th. Some reports claim that Durov could face up to 20 years in prison due to the nature of the alleged offenses. The Open Network, the third-party blockchain protocol and the messaging platform has integrated into its service, claims to remain fully operational in the hours after Durov's arrest. An official post on Ton's X account stated that the protocol was unaffected and its community was rallying behind Durov. As a community committed to freedom of speech and decentralization, we stand firmly by Pavel during this challenging time. Telegram has yet to comment on Durov's arrest. Cointelegraph has reached out to the messaging platform to confirm the details of the incident and if there's any risk of the platform having to hand over user data to French authorities. Tesla founder and ex-owner Elon Musk took to his social media platform on August 24th and shared a previous interview between Durov and independent journalist Tucker Carlson with the hashtag #FreePavel. In the video, Durov said that Musk's takeover of Twitter had been a positive development for technological innovation and the provision of free speech. Etherium co-founder Vitalik Buterin also weighed in on the topic in reply to an X post by American entrepreneur and investor Balaji Srinivasan. Buterin said he has previously criticized Telegram's encryption standards, but said that the initial information relating to charges against the platform looked very bad and worrying for the future of software and comms freedom in Europe. Other prominent figures took to X to weigh in on the developing story as Telegram began to trend on the social media platform. American politician Robert F. Kennedy Jr., who suspended his United States presidential campaign in August 2024, said Durov's arrest highlighted the need to protect platforms that enable free speech and privacy. In his interview with Carlson, Durov claims that Telegram had garnered unwanted attention from the FBI and other U.S. security agencies whenever he had entered the country. Telegram CEO claimed that U.S. officers had attempted to hire one of his engineers during his last visit to the country. There was an attempt by cybersecurity officers or agents to secretly hire my engineer behind my back. They were curious to learn which open source libraries are integrated into Telegram's app, and they tried to persuade him to use certain open source tools that would serve as backdoors, Durov told Carlson. The Telegram CEO added that FBI agents frequently stopped him upon entry into the U.S. and asked him questions about the messaging service's operations. As details surrounding Durov's arrest and the investigations into the platform remain scant, questions about the privacy features of Telegram have been raised by industry groups. An ex-post from the open source privacy and security-focused mobile operating system firm Graphene OS highlighted concerns over Telegram's access to group and one-on-one chats. Graphene OS claimed that Telegram has full access to the content of group chats and direct messages due to a lack of end-to-end encryption. The post claims Telegram's secret chat features use homegrown end-to-end encryption with weaknesses and that deleting content from the app may not remove all traces of the messages. Graphene OS added that Telegram could potentially provide individual and group messages to authorities in France. So obviously not a good day for freedom and liberty. And I had heard that Telegram's encryption wasn't the greatest. And there are potentially better tools like Signal. And of course, peer-to-peer networks like Nostr, which does enable direct messaging, are probably the best because you can. There's nobody to arrest. There's no leader, just like Bitcoin. So I think the future of freedom and liberty and being able to communicate is going to be these decentralized protocols, not centralized platforms, unfortunately. So anyway, this will be a story to follow. And then finally, this was posted on August 22nd. El Salvador announces Bitcoin certification programs for 80,000 civil servants. El Salvador, the small Central American country known for being the first to recognize Bitcoin as legal tender, has embarked on an ambitious initiative to train and certify civil servants in Bitcoin. This move underscores the government's commitment to integrating Bitcoin into the fabric of the nation's economy and governance. The National Bitcoin Office, ONBTC, of El Salvador, operating under the presidential office, has launched a comprehensive Bitcoin certification program aimed at enhancing the skills of 80,000 public sector employees. The program, known as Certification in Public Administration 1, is a 160-hour virtual course divided into multiple modules with the goal of equipping civil servants with deep understanding of Bitcoin, its legal framework, and its strategic management as legal tender. This initiative represents a significant step forward in President Nayib Bukele's vision to make Bitcoin a central component of the country's financial system. Stacy Herbert, the director of ONBTC, expressed optimism about the program's impact, stating, "This truly is just the beginning, for we have yet another major announcement to make soon on education that will make you go, wow. These education projects are very low time preference commitments to the long-term success of El Salvador and its Bitcoin and tech policy." Her words highlight the government's belief that investing in Bitcoin education will yield long-term benefits for the country's economy. The certification program is structured to provide comprehensive education on Bitcoin. It spans 160 hours and is divided into 7 to 9 modules depending on the source. These modules cover a wide range of topics essential for understanding and managing Bitcoin within the public sector. They include the basics of Bitcoin, its legal implications, strategic management, blockchain technology, cybersecurity, and even aspects of artificial intelligence. The Higher School of Innovation in Public Administration, established by President Bukele in August 2021, is responsible for conducting the training. This institution was created to elevate the standards of governance in El Salvador, and the Bitcoin certification program is a key component of this mission. By educating civil servants on Bitcoin, the government aims to create a Bitcoin-ready workforce that can effectively manage and implement Bitcoin policies in various aspects of governance. El Salvador's commitment to Bitcoin education extends beyond just civil servants. The government has also announced plans to introduce Bitcoin courses in public schools. Open source courses like Me Premier Bitcoin and Node Nation will be integrated into the national curriculum, ensuring that the younger generation is well versed in Bitcoin from an early age. This move is seen as a strategic effort to familiarize the nation's youth with digital currencies and prepare them for a future where such knowledge is increasingly relevant. The inclusion of Bitcoin education in schools is part of a broader effort to embed Bitcoin knowledge across all levels of society. The ONBTC's approach reflects a belief that widespread education will help normalize Bitcoin usage and integrate it more deeply into everyday life in El Salvador. The Bitcoin certification program and the broader educational initiatives are part of President Bukele's larger vision to transform El Salvador into a hub for Bitcoin and technology. Since adopting Bitcoin as legal tender in 2021, the country has been on a mission to position itself as a leader in the digital economy. The government's focus on education is seen as a critical component of this strategy. By equipping public officials and citizens with the knowledge and skills to navigate the world of Bitcoin, El Salvador aims to foster a more innovative and dynamic economy. The ultimate goal is to modernize the country's financial system, promote digital economy adaptation, and ensure that the benefits of Bitcoin are accessible to all. Stacy Herbert, in discussing the potential impact of the program, emphasized the compounding effect that educating civil servants on Bitcoin could have on the country's economy. She believes that as more public officials become knowledgeable about Bitcoin, the more effective and efficient the government will be in implementing and managing Bitcoin-related policies. This, in turn, is expected to drive broader economic growth and innovation. El Salvador's success with Bitcoin has not gone unnoticed in the international stage. Argentina, a country grappling with economic challenges and hyperinflation, has expressed interest in learning from El Salvador's experience with the scarce digital asset. In May 2024, Argentina's National Securities Commission initiated discussions with El Salvador's National Commission of Digital Assets to explore potential collaboration opportunities in Bitcoin regulation and adoption. Roberto Silva, president of Argentina's CNV, highlighted the importance of strengthening ties with El Salvador. He indicated that Argentina is eager to leverage El Salvador's insights into Bitcoin adoption as it considers similar strategies to stabilize its own economy. He stated, "We want to strengthen ties with the Republic of El Salvador, and therefore we're going to explore the possibility of signing collaboration agreements with them." This potential partnership between El Salvador and Argentina underscores the growing recognition of Bitcoin's role in addressing economic challenges, particularly in countries facing financial instability. El Salvador's leadership in this space has made it a model for other nations considering similar paths. While El Salvador's Bitcoin strategy has garnered praise and interest globally, it has also faced skepticism and criticism, particularly from international organizations like the International Monetary Fund. Initially, there were concerns about the risks associated with adopting Bitcoin as legal tender, including potential impacts on financial stability. However, recent developments suggest that these risks may not have materialized as anticipated. In fact, the IMF recently acknowledged that some of the predicted risks had not come to pass. Moreover, El Salvador's Bitcoin holdings have proven to be a profitable investment. As of the latest reports, the country holds approximately 5,848 Bitcoin, with an unrealized profit of over $47 million. This success has bolstered the government's confidence in its Bitcoin strategy and has provided a financial cushion that could be reinvested into future economic development initiatives. Despite the positive developments, challenges remain. Public adoption of Bitcoin in everyday transactions has been slower than expected. Surveys indicate that while many Salvadorans have tried using Bitcoin, its regular use is not yet widespread. For example, a significant portion of the population downloaded the Chivo wallet app when it first launched, but many did not continue using it beyond the initial incentives offered by the government. Moreover, businesses are not uniformly embracing Bitcoin. Although there is a legal requirement for businesses to accept Bitcoin, only about 20% of them are reporting to be complying, with many opting to convert Bitcoin sales back into US dollars immediately. This indicates that while the government is pushing forward with its Bitcoin agenda, there is still work to be done to ensure that the private sector and the general population fully embrace the digital asset. And then finally, just wanted to highlight this week's featured post on the Bitcoin Fortress Substack. article is entitled "The Clipping of Coins in the Roman Empire, a Lesson in Currency Debasement and Its Societal Impact." I will include a link in the show notes. And if you like it, please become a subscriber. It's free. Or if you really like it, you can become a paid subscriber. It's not that expensive. And then I also wanted to give a shout out to the top boost on Fountain last week at God's Death with 676 sats. Thank you, sir. And with that, I'll thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can also follow my Substack at bitcoinfortress.substack.com, and you can follow me on Nostr. I am Nostr only. In fact, I just connected my Nostr to Fountain, so I think you'll probably see posts in there. I don't know how it all works, but check it out, and I will talk to y'all next week. Bye-bye.